Guys, Victoria Bailey here with Keller Williams. I'm the team leader of Empower Home Team, and we have a special guest with us, Mr. Jarrod Hunt. And how are you
Hi,
doing today?
I'm great. How are you?
Good, good, good. So tell us a little bit about yourself.
My name's Jared. I am a loan officer at Dolfin Home Loans in Virginia Beach. I'm licensed in the state of Virginia and also in North Carolina and Florida.
Cool.
Originally from Florida, moved to Virginia 2 years ago. I have been in the mortgage business, starting on the operations side and now in the sales side as a loan officer, and working towards getting people in the home of their dreams. So
Awesome. Awesome. It's great. You guys, it's always a great. I'm gonna tell people a little bit of joke. So every time I would read his name, I would always call him Jarrod. His name is Jarrod. And now it's just this joke that we have, but he's absolutely a wonderful, wonderful loan officer. And he is very thorough. I have never not asked this man a question. And he was like, hey, I don't know the answer to that. And he will come back with a full blown email saying, this is the explanation, this is why. And I just thank you for being so thorough and taking care of our people.
of course,
I
definitely.
appreciate it. So, you guys, we are here to talk about one of the programs that Dolfin Home Loans has. And we are talking about bank statement loans for our self-employed borrowers. So tell us a little bit about that. This is what I like to call creative financing, right? To get people into their dream home. So what does that look like? What does that program consist of?
So a bank statement loan is strictly going to be for people who are self-employed.
Okay.
Um, self-employed borrowers who might on their tax returns write a lot of things off within their business. In that sense, that can reflect their tax returns lower qualifying monthly income. The bank
Right.
statement loan program can be extremely beneficial for people to get past that when they do write a lot of things off. We can go ahead and enter you into a bank statement loan program where you would supply either 12 or 24 months worth of bank statements.
Okay.
So a couple of requirements for this program, and then we'll get into some details exactly how it works. There is a minimum FICO score of 640. You can do purchase price up to $3 million. It is a minimum of 10% down. Obviously, when we start the process and we proceed with this bank statement loan program, we're going to shop rates, and I'm going to find the lender that's best for you and that specific day, depending on what the rates are.
So I have a quick question. I mean, cut you off.
Right.
A quick question
Go ahead.
about the down payment. So I work with a lot of first time home buyers. Also, at the same time, a lot of them are self-employed. So because they're going through the bank statement loan program, can they receive assistance with their down payment, like they would with like the HDA? Is that possible, or is that not possible with this program?
Not possible with this program.
Okay. Good to know.
Fortunately, not possible with this program.
Okay. Cool. That's good to know, because a lot of people will come to me and they'll ask and they'll say, hey, well, I'm a first time borrower. Can I do this? Can I do that? But also to know, like, hey, you're self-employed, and because we're going through this program, these are the things that don't qualify. But there are other options. I'll let you continue. I kind of wanted to. I knew that would be a
No,
question.
that is a great question, because I think that a lot of people who are self-employed might be their business has taken off and put them on a whole new monthly qualifying income than they used to be,
Right.
since they've started their own company or started their own business and maybe stopped working for somebody else. And their ability to purchase can be expanded so much with this specific program, because we can qualify them off of their bank statements solely. We don't need any type of tax returns from you. If you do, there are some self-employed borrowers or who W-2 themselves through their business. If that is the case, we would need your W-2s as well.
Okay.
Now, I wanted to give an explanation on the difference between 12 and 24 months. Very briefly, I'll say, let's, for example, say someone has been in business for 2 years flat, and the first year of their business, they were just starting. They weren't making as much money as their second year. We would want to only use 12 months worth of bank statements for them, because their second year showed more income, which would in turn give us a higher monthly qualifying income based off of what an underwriter would determine.
I mean, but that's good to know.
The steps would be initially, I would speak to the borrower about what their situation was and if we wanted to do 12 or 24 months. I would collect the bank statements. I would automatically submit them to a lender and directly to an underwriter. That underwriter will upfront underwrite those income documents for us. The last thing that I want to do is for us to be put into a situation to where I don't have these upfront underwritten documents done, and I pre-qualify somebody for a higher amount than what they're actually shopping for. And then we get into the loan process and the loan is denied. So it would be very important from the beginning to collect those bank statements so I can submit them, get them upfront underwritten, and we can proceed with getting a pre-approval done.
So, quick question. I'm making notes as we talk. Quick question for the people. What is an underwriter?
An underwriter. Good question. So an underwriter is someone who works for a lender. They follow all of the guidelines for mortgage loans. So by law, there are specific guidelines that are set in place to prevent foreclosures, defaulting on their loan, making late payments. And the underwriter is the one that's going to follow all of these rules and guidelines. What they do is they will look at all of the income documents that we submit. They'll look at all of the asset documents or bank statement documents that we submit, and any other discrepancies or information that we provide to them. They are going to approve that information and say this loan is approved, eligible to proceed, and that we are able to lend this money to this person.
Awesome. No, I mean, that's good to know. Now, I want to kind of step back for a little bit because you're a mortgage broker, so you would be submitting your documents to the lender.
Correct.
So as a mortgage broker, just for the people, for their understanding, what's the difference between a mortgage broker and a lender?
As a broker, I have the option to shop multiple lenders. We work with many lenders. Being able to shop multiple lenders means at different times, these lenders can have different interest rates. They can have different loan programs that are available. They can even have specific things that we take into account, such as faster underwriting turn times, better communication, etc. And that is where I have the ability to pick and choose what lender that I want to use.
Gotcha.
Yes.
And I mean, that's honestly for the betterment of the client, right? We want open communication. We want quick turnaround time. So you're really taking a lot of stress off of them when you're shopping for them because you know what they want and you're making it happen. Okay,
correct.
Cool. Awesome. So you were talking a little bit about bank statements. I do have you were talking about how you were submitting the bank statements to the underwriter and kind of how you would pick between the 12 months and 24 months, depending on how long they've been in business, right? So question, a big thing that I always get asked is where are the current interest rates? So from your conventional programs like your FHA, your VA, and your conventional loan, how are the rates on the bank statement loans side? Are they different? Are they the same?
They are different.
Okay. Full
transparency, since these are a specialized loan program, the rates will be a little bit higher with these loans. But what I think of it on my side is that it gives the person, the self-employed person, the opportunity to purchase more home. We've had specific situations to where we can submit business tax returns. And for example, somebody's monthly qualifying income was $4,000. We submitted bank statements and it could rise substantially. It could double and triple based off of the business cash flow that we can show from a bank statement. So awesome. Being able to purchase more home for a self-employed borrower is important. It's great for that person. Correct.
Yeah. So cash flow, right? So we have these cool little cash apps where we can send money back and forth. Mm-hmm. So we have Cash App, we have Venmo, we have Zelle, and then some people use cash. How does that, from a standpoint of helping someone get a mortgage in the bank statement loan program? Because let's call it what it is. There's a ton of service providers where they prefer cash because they know it's a definite payment. People's cards decline, or they write a check. The check may not be a good check.
Mhm.
So, from the service perspective, for a client looking to purchase, and they're using the Cash App and the Zelle, the Venmo, or they're just taking straight cash, what could they do now to help them purchase a house if they are using these systems? And do you even accept them?
So I want to go back to what an underwriter is, what the underwriter is looking for. The underwriter is approving the loan and approving the income.
Okay.
And they're doing this basically to say that this person does make this person makes this money, and this money is traceable. Unfortunately, with things like Cash App, Zelle, Venmo, and even receiving cash, these things aren't traceable. Part of the underwriter's job is to make sure that by law, the money that this person is receiving into that bank statement is not money earned by money laundering or being earned by any illegal activities. So using these money exchanges through apps like that or even cash can definitely negatively affect what your qualifying income will be, only because those ways of exchanging cash or money are not 100% traceable, as if you were on payroll at a company and you were receiving payroll directly into a business bank statement or your personal bank statement, that money
Gotcha.
would be coming from a business name
Instead of
on
like Cash
as a
App.
deposit. Correct. Yes.
So question. So one thing you mentioned, and I swear I'm not trying to be devil's advocate, but I've had these conversations with clients, so I kind of want to make sure that they're getting the answers from the source, right? Because
Okay.
I always tell people, I'm not the lender, you're the lender, you're the one helping them get the loan. So you said that they're not traceable. So I hate to be devil's advocate, but I can pull up Cash App and there's like a trace, and I can pull up Zelle and there's a trace. So when you say traceable, do you mean from like a source business like Square, or a different type of POS or a point of sale system? Is that what you mean by traceable?
Traceable meaning whenever there's a company deposit into your account, it'll obviously show that company's name, and it'll
Right.
show a deposit number, and basically a transaction number into that self-employed or person's bank account, being able to show that that's a company depositing the money into that account.
Got you.
I understand what you mean by being able to trace it through Cash App, but for example, I could give money to someone and I could give cash to someone and then they could send it back to somebody else in Cash App. And that money would then not be traceable because it originated as cash. Uh,
Got you. Okay.
so I
So
would
like
I
it
would
started from
say
one person to another.
correct. So
Okay.
unfortunately, it is ruined for all of us with people who commit money laundering and are doing illegal activities and
Yeah.
depositing cash and funneling them through multiple people to then get it into their personal bank account. And that
So
is obviously something that an underwriter is going to flag.
so let's say someone wants to buy a house in the next 10 to 12 months. Well, yeah, I would say let's say if someone wants to buy the house by the end of the year, right? So we're basically April is tomorrow, basically. So we have a few more months left in the year. What could they do now? Let's say if they need to be in something by December 31st, what could they do now to help that? Although part of their bank statements would show that, but it would show a change in payment method.
I would highly suggest anyone who is self-employed to, I work with a lot of credit card processing companies. They have things such as the Square app on your phone that people
Mhm.
can take payment processing through. And being able to set up a system like that within your company and take payments in that way
Right.
would definitely help you being able to make sure that the deposits into your account would be considered qualifying deposits and then would turn into obviously qualifying income. Um, Being able
Gotcha.
to track it through a company such as the Square apps, and stuff like that, where someone's actually submitting a payment, whether it's submitting it through online or you're physically swiping a card. Those would be ways to be able to change now. So in the future, say in December 2022, you were wanting to purchase, you would have those traceable deposits into your business or personal bank account.
I think it's so important. I think it's so important that one, that we're getting this information out there to the people to help them, because a lot of times I'm not gonna say they don't listen, but they want to hear they hear everyone, they hear all the chatter. Oh, I bought a house like this, or so and so bought a house like that. So I think it's really important that people understand that the way that self-employed borrowers, or even people like you and I, we work off commission,
Correct.
which technically in turn makes us independent contractors, self-employment. So I think it's really important for people to understand that and pull that through. Okay, so I'm sorry, I completely lost my train of thought in all my notes.
I would say that definitely with a specialized loan program like this, everyone's situation is going to be different. Being
Yes.
able to call myself or someone else and maybe ask questions, because at this point, me and you have spoken about it extensively, and being able to ask questions would be great. And if they are planning on moving within the next 12 to 24 months and they are self-employed and might want to set themselves up for success in the future, let's go ahead and talk about it now. So whenever we are ready to move and purchase, we can go ahead and we know for sure that they're tracing their funds correctly, and that we will be able to get them into the house that they want and qualify them for the amount that they want as well.
I think it's important to have a plan. So after they find the house they're looking for, right? How long will it take to close? Normally closing time frame. Sometimes I try to push for like 30 days. As you know, this market is crazy. So sometimes I try to push for 30 days. How much time do you genuinely need to close this loan for the client?
Typically speaking, with a bank statement loan, I would lock an interest rate for 45 days, maybe even 60 at times. These loan programs can definitely take longer to process through the lender. We would plan that from the beginning. I would plan that with you being the realtor and let you know, hey, they are pre-approved through a bank statement loan program. When you're writing that offer and or contract, please make sure that you're giving me 45 days to close this. Obviously, I want to close it as soon as possible. If we're able to close before then, we're closing before then. But I would never want to promise someone 30 days or before that closing and then not be able to deliver on that. That would be important.
That makes sense. That makes sense. So have we missed any important piece that the client needs to have in purchasing their home?
I can't stress enough. If you are self-employed and you want to purchase a home, I would say call and ask questions. Call, let's talk about it now. Let's talk about your specific scenario. You know, what is your occupation? What is your business? You know, what are we projecting would be your income per month? And is that going to increase over the next 12 to 24 months to get you to that position to where you can purchase the price that you want, the home that you want, and get you to that position? Don't wait until you're ready to do it. And then your lease is up and you have to move in 3 months and then you never really had a plan. Like you said, Victoria, it's extremely important to plan these things ahead of time. Making a home purchase is one of the biggest purchases that anybody will ever do in their life. And let's talk about it now before it's too late. We can get you in the place that you like.
Yeah, no, it's super important. You and I are both planners. So we're both like, let's make a plan.
Yes.
Please don't wait till the last minute. We try to sprinkle fairy dust, but it doesn't always work.
Correct. Yes.
I always tell people, call. No one's situation is the same. And I think that's like the biggest thing. I think I say that all day, every day. And my clients and probably my team gets so tired of hearing me say it, because nobody's situation is the same, whether they're buying or selling. It's really important that they say, hey, like, this is what I want to do. So what do I need to do? Right? Ask us those questions and go to the professionals. You guys, Jarrod is a professional. Okay. He is going to walk you through it. He's going to look at your financing. He's going to look at your bank account. He's going to look at everything. He's going to look at the whole picture. And then he's going to let you know, hey, this is where we are. This is what you need to do. And this is the plan. Also, at the same time, you guys don't lie to us because he's going to find out. Just throw that out there.
And if I don't find out, the underwriter will find it. So
that is very true. It is so true. It is so true. So anything else? I mean, I think, 640 FICO score, minimum 10% down, up to 300 million and
3 million. 3. Let's talk about FICO scores. I think that I see FICO scores or your credit score often. Right. I know we're going to wrap up soon, but talking about credit scores, if you ever think that you have a credit score, you don't know what it is, maybe you don't know where to monitor it through, I would highly suggest if you did want to plan to purchase within the next year to 2 years, and you have no idea where your credit is at, if you even have credit, maybe there's maybe there's medical debts on your credit that you don't even know are on there, or things that are on your credit that you have no idea that are there. I'm always here. Pulling your credit through a mortgage lender is a hard hit on your credit. It will decrease it. But being able to see your credit report and then plan on that, I would never discourage. Sometimes when you're looking at things like Credit Karma, we will never see the same score as Credit Karma. We will typically see Credit Karma being sometimes 40 to 50 points above what the actual score is that we have. So
that's a game
if
changer.
Credit Karma is telling you 640, most likely I will tell you that we will pull it and it will be lower than that. So let's talk about your credit. Let's find you ways to establish credit. I work with a lot of credit repair specialists that are experts at it. I would never call myself an expert at credit. I can give you advice on credit, especially if I can look at your credit report. I can give you some advice on your credit. But if you think that your credit needs a lot of work, let's talk about it today. Let's get you set up with a credit repair specialist, and let's get you that score high in the 640s and above, and get you ready to purchase whenever you are there and ready to do so. So,
yeah, it's important, you guys. Look, this is what I'll always say. If we are not the experts in a certain field, we have a ton of resources that we can call, that we can ask upon, where we can really get that information from a professional, right? So I'm really great at real estate. He's really great at the mortgage and the financing part of it. And when I have questions, I call him. Okay. Because that's the only way that I can fully help create a plan for you guys in buying your house. And with this, I know we hit a lot of general points. Everyone's situation is different. You guys call us, text us. You can put a smoke signal up and we'll come. Okay. Thank y'all so much. Thank you so much. Jarrod, I really, really appreciate it. And you guys, we are going to come back and we are going to talk about self-employed borrowers and if they're W-2ing themselves and how that would look. This time, we just really wanted to focus on those that want to use bank statement loans and kind of get some general information out about that. Have I missed anything?
I think we covered it all.
Awesome.
You said it right. If you have further questions, call either of us. Let's talk about it.
Yes.
And let's get your questions answered right now. And and we'll work on whatever you need.
Yes. Amazing. Thank you guys. We'll see y'all later.